Hello, fellow traders. 'Tis I, the Rumpled One. Coming to you Thursday, October the 22nd, the year's 2020. Let's talk trading. Focus on one. I received an email from a trader today asking if they could make money only using the buy zone because they also have the rat zone and I think the wick zone and maybe a couple other things. But before I get into it, I just want you to remember that these videos are for educational purposes only and your results may differ from mine. You know, Bruce Lee said that the successful man is the average man with laser focus. Contemplate that, ponder that. Because what that's saying is that this successful person doesn't necessarily have anything you don't have, either abilities, skills, genetics. It's just that that successful man has been focused on one thing. Now, I definitely present, I don't know, a half dozen or more methods. I guess we could count them up. Maybe we should count them up as I go through here. But at any one given time, I'm focused on one method. I am focused on one pair. I am focused usually one direction. That way I cut down on the variables. And hopefully the only variable is the price. So to answer that trader's question, which I replied via email, but here in the video too, yes, you can make money only trading the buy zone. And we'll see that shortly. But of course, every trade, you have to have your risk management in place. That means you've got to have your stop loss in place so you don't lose more than you're willing to lose. Okay, looking here, all the gaps filled. You can see that the pound dollar this week just took off. I mean, the low is, I think it went down barely a pip, like 7 points, not even a full pip, and it just took off. It has pulled back 86 pip off the weekly high. But you can see here, it just moved up out of the lower wick zone, out of the upper wick zone to make a new high for the week. Now, very interesting. Once again, opening day, the opening day for the week, first day of the week, that open range right here. You see, yesterday shot right through it. Now today, this is the opening range for the year, first day of the year, the high and the low. And you can see here at 15, we just crossed below it, yielding 27 pips at the moment. So once again, so we're going to keep track of methods, right? So the first method was a gap fill. So that's one method. Second method we're going to have is the opening range for the week, for the month, and for the day. So you can see here the month, yesterday shot through, for the week shot through. And then here for the day, shot through the yearly, or the low for the first day of the year. Good for 29 pips at the moment. Okay, now this chart here doesn't really have a method. It's just mainly information telling you where price is in relation to the year's close, high. I'm sorry, open, high, and the low. So you can do it for the year, the month, the week, and the day, all here in one chart. Oh, and in case you're wondering what indicator that is, that's an old TRO 2014 multi-frequency. That's what the MS stands for, the GPS. Now, if you have the dashboard, you can do the same with the dashboard. And if you don't have any of the donationals, you can take TRO HL5, load up 4 instances and just have the high, the low, and the open displayed for each one. And then here over on the right here at the line label, it'll give you the same information. So for those of you who don't want to donate, you can get the same info. You just have to work for it a little bit. Okay, inside bar, that's another method. So let me just make sure we've got this right. We've got 1, 2, no method, 3 inside bar. 5 weeks ago broke there, and 2 days ago broke there. So the inside bar method. This is just another informational chart. So we've got the GPS, and we've got the range for the fib people. We've got the fib people. They have the current fib level today. You can see here at the 9 fib right here. 6 pips off that low. Buy zone. Here's another method. Yeah, yes, you can make money with it. Okay, what do we have here? Got the pivot point here. So if you're using the pivot as a bias, or let's forget the pivot right now. Let's just look at the buy zone. If you took the trigger, a few pips right here, probably a scratch, potential loss, short. Let's see. That's a actually, that could have been a scratch here or potential loss. Little money there, little money there, little money there. Nice move to the downside. So yeah, you can make money with the buy zone, and that's just, this is the daily, but you can also switch to the hourly, and you can trade the buy zone every hour. But you move the range in, instead of being +8, +10, you probably have it +4, +5. Especially if you're trading a pair that ranges more than say 13 pips in an hour most of the time, frequency distribution wise. Whoops. Rat zone. This is method 5. And you can see here the red rats didn't really have a chance to feast because the range wasn't large enough here, but then the green rats got 1, 2, 3, 4 opportunities here, and we're in the green rat zone. But the range is only 67 for the day, and usually the pound is up, the range is a little bit higher, so you might want to be careful, green rats, looking for reversals here, because it could just push down a little bit further. Pivot traders, pivot faders, there's another method. So that's method 6. You want to look for the pair to go from the open towards the pivot. And you can see here we've almost reached it. Pivot at 81.5. We're just a few pips off of it. And this is just more on the pivots. This is showing the weekly pivot. Took that out. This is showing the daily pivot. And look, we just took it out. And I will, I'll tell you something. I went short at 23, heading towards the pivot. The price reversed on me, and then it came back down. I was up a few pips. My break even +1 kicked in. It took me out. It went up. I didn't re-enter on the downside, and you can see here I missed that. So from 23 to 80 was about 40 some pips. I missed. So yeah, I'll be kicking myself over that one. Okay, the wick zone, another method. That's method 7. So you can see here, in and out of the wick zone, in and out, in and out, in and out, in and out. Okay, this one we're calling the DSR trades for dynamic support resistance. So that's method 8. And the thing here, we have about 2 or 3 different ways we even play this, but it's still pretty much all the same method. We're thinking that price is going to reverse after it gets to a certain range. So you can see here, 27, 26, 28 for the last 3 hours. So it might move a little bit further because on the day we're only at 75. And the previous day was 249, and you can see here, let's see, this is Thursday, Wednesday, Tuesday, Monday we had a 133. So you can see here, this day here was definitely a compressed day. And what happens after compression? Expansion. Okay, we've got the Walmall method, sweet spot method. We can call that method 9. And once again, you can see here, candle was red at the double O, and you'd be up over 20 pips if you stayed in that trade the whole entire time. So it looks like I present about 9 methods, and you can pick any one of them, and you can be profitable, but you have to have laser focus. And remember, these videos are for educational purposes only, so your results may differ from mine. But these methods have been basically proven with statistics. The only one that haven't run any statistics on is the DSR trade, because on this trade we're not looking for much. And about the only statistic, in fact, I'm working on the program, and I think I may have written it before. I might have to dig out some of my old code, but I just want to know the distance. But every time we get a new ball, so from here to here, what's that distance? From here to here, what's that distance? So then we can see what the range is. What's the smallest range between, one balls? And how often does that occur? Because one of the things is, when you look at this in hindsight, Harry hindsight, you can see that you had a 3-ball here, and this 3-ball, there's probably a 3-ball here, and that's why I also use the dynamic support resistance indicator. So you can see here there was a horizontal level, but if you look at it, you can see every time there's a ball on the bottom and you get horizontal, then there's a ball on the top, and there's distance here. Ball on the bottom, ball on the top, ball. And if you just have faith in it and you stay in the trade till the ball appears, usually there's pips to be made. Now, sometimes things get kind of compressed. So like here, we go from 84 to 93. That's only 9 pips. But, taking the method here, we'd probably only be looking for 1 pip, especially to the north, because this is shaded here. That means the H1 was down. So you don't really want to trade against the H1 candle color unless you've had experience and you know to get out at the right time. So the trigger could be the previous candle's high, or you see this previous horizontal dynamic support level right here, or another one right there. You can take one of those triggers. So if that puts in this one ball starts to reverse up, you can jump in. Probably wouldn't have, due to the fact that this candle was still red. So maybe you let that candle close. Maybe you took the trade right here, breaking that previous high. Maybe you picked up a pip, and sometimes that's all we're looking for. Just take a pip and just stack up the pips, because you can see there's a lot of trading. So sometimes when you get these tight ranges, that you're not going to get the bounce, and here you got the breakout instead of the bounce, and that's something else to look for. And of course you can switch time frames, because one of the rules I've put in is that I look over here, and if like if this is red and I'm looking to go long off of this 3-ball, a lot of times I'll just wait, because when I analyze the trades that I'm in trouble or losers, it's usually if I'm going against the M5 candle color. Had I just waited, in fact, we can switch to M5 real quickly here, and you can see, maybe if you just wait for this M5 to close on the 5-minute, because here you were going against it, but you still had a chance at a pip. A lot of times you don't even get that chance. So, fellow traders, yes, you can make money only trading the buy zone or only trading one method, because it's not what you trade, it's how you trade it. So go out there and drain the banks. And if you're here for the first time, welcome aboard. Please subscribe. And this is TheRumpledOne. Over and out.